All right. Hello, everyone. Welcome again. This is part three of Start Your Empire. Today, I want to talk about claiming your tax benefits with this home-based business. Now, we've in part one, we talked about um, being able to sell 1 to 3 pieces of jewelry per day to generate 400 PV per month. I'm sorry. And then part two, we got into ranking into dollars. And today we're going to talk about tax benefits. So let's start. Basically, there are 4 ways in which to make money within paparazzi using it as a home-based business. And 3 of the ways is through direct sales, which we talked about, buying retail, selling wholesale. And the 3rd way is building your team. And I'm sorry, the 2nd way is building your team, and then there's online bonus. But there's also a 4th way that we've somewhat alluded to before, really hadn't gotten much into it. And today I really want to jump into it. And that 4th way is income tax benefits. Now, you might say your income tax benefit is not income. Well, in a sense, it is. If we look at it from the standpoint of if you don't have to pay income taxes, if you're able to save that money, then that money is still in your household. So that is a profit. You didn't lose it per se. So that's important. And in any home-based business, the thing you have to keep in mind is that you want to be able to retain as much of your money as possible without having to give it to the government. Now, a home-based business allows you certain tax deductions that are not available to ordinary taxpayers. And what we're going to see today is what some of those are. Now, if you look at the left-hand column, you'll see that ordinary taxpayers, what they do is they work and they make their money. Uncle Sam takes the taxes right off the top. Your taxes are taken out before you can get your paycheck. And then you spend what you got left. You know, you have to live and set your lifestyle up on based on what you have left. And then you file your taxes April 15th every year, by April 15th, I should say. And then you see if you get anything back. Well, that means that 30 to 40% of your income are taken out in taxes, whether it's federal, state, FICA, those other things that comes out of your check. You get a large chunk of money that's taken out of your check every paycheck. So you're working with approximately 60% of your income to maintain or establish your lifestyle. Now, as a business owner, it's a little bit different. You get to make money, then you get to spend money on making and managing your business. Now, that's a big difference. And you pay taxes on what's left. Now, I need you to let that marinate for a second, because I just said a lot. And it may fly past you at first, but I really want you to try and pay attention to some of the things that I'm going to say and some of the things I'm going to show you. All right. Now, what I want to do is talk about some of the tax deductions that are available to a home-based business. You got mileage, you got your cell phone, business supplies, any equipment that you might need for your business. You need laptops to run your paparazzi website. You may need an iPad to use for Square for making transactions. Anything that's business related. Equipment could be a mobile trailer. It could be anything that you use for your business. Travel, of course. Being a paparazzi consultant, you're not confined to a specific location. So if you really think about this thing and you really change your mindset and you focus and you try and focus on business, then you realize that everywhere you go is a business opportunity. And if that's a business opportunity, you need to carry your jewelry, right? So if you have to stay overnight anywhere, there's lodging that's included. There's miles, like I said, mileage associated with that traveling as well. Rent, lights, gas, electric, just to name a few. Now, trash, burglar alarm system, internet, business training and seminars. Every year we go to Vegas for training. Some of the upline sometimes sponsor different training at various locations. Anytime you spend money and do things relative to the business, that's a tax deduction. And I got homeowner association fees, HOA, for those that own homes. And I'll talk a little bit about that in a little bit. But basically, it's almost anything. Here's the key. That's reasonable and necessary to grow your business, right? And this list that I gave you is not an all-inclusive list. You're actually entitled to much more. I just kind of threw a few of them out there for you to take a look at. Now, what IRS says is, with the IRS, documentation is the key. Documentation of all expenditures. Basically, if you can answer the essential questions, who, what, when, where, and why, you should be okay with the IRS, right? Here, what my wife and I use, we use Square to track our inventory. Of course, with paparazzi, you got to keep track of what you buy, what you sell. And I also use a program called Cash Flow Manager to track all of my other expenditures. And that costs me $10.95 a month, but it is a tax deduction if you decide to do that. You don't have to. That's just something we do. Because Square, we haven't figured out how to input those other things in Square, which I don't think you can. But there are a lot of other things associated with your business that you do that you need to keep track of. All right. So that's where that program comes in. Now, what I want to do now is I want us to analyze a personal tax situation with and without a home-based business. That's the key. I'm going to do them side by side for a basic comparison. And, there's a small disclaimer I want to make. Now, what I'm going to do is make some real-life assumptions of typical expenses over, in their summation over a 52-week period for demonstration purposes only. All right? So what I'm trying to do is create a scenario that's realistic to most people. I mean, when you create a scenario, you got to make up numbers, but these are based on real situations, real life situations. And in this particular scenario, I'm assuming that there's a family with a combined income of $60,000 per year. I don't think that's unrealistic. Yours may be more, yours may be less. It doesn't matter. I just need you to pay attention to the strategies that I'm talking about, the things that I'm talking about here, the substance of what I'm talking about. So with this combined income, husband and wife filing jointly on their taxes of $60,000 a year, we're going to assume that Uncle Sam withheld $4,000 in federal taxes. You see that every year. Every time you get a paycheck, there's a certain amount of money they take out of your paycheck, and at the end of the year, you get your W-2. Well, that's what I'm talking about, $4,000 withheld. And we're also going to assume that they rent a 1,500 square foot house, right? It's a 3-bedroom. Now I said rent. They're not buying, but in this particular case, we're just going to make the assumption they're renting. 3 bedrooms. You can assume they got kids or not. It doesn't really matter. But what I also assume is that they got 2 extra bedrooms. One is a 10-foot by 12-foot room, which is a 120 square foot room that they're using for office space. Office space would be where the computer is set up for you to make all your online transactions, going live, and anything that you do associated with your business. You gotta change your mindset. It's business use. Your office is for your business, right? And I also made another assumption that there's another room available, which is a 10 by 10 foot. So that's a 100 square foot room for inventory storage. Now, you ladies and gents, when you get into it and you start ordering jewelry, you can have a lot of boxes to come to the house. Well, guess what? You got to have a place to store it, right? So we're going to try and designate a certain space in the house to do this. And that's where the allocation came from. Now, when you add the two rooms together, 120 plus 100, you get 220 square feet. And when you divide that by the total square footage of the house, right, you get 0.147 times 100%. That's a 14.7% expense allocation for your home utilization. Now, Shauna, is Shauna online? I don't know.
Yes, I'm here.
I don't know what happened here. The little house is covering up my 14.7, but I don't think that's your fault. Because when I'm looking at the PDF, the house is offset to the side. So people, you can't see that number. I know you can't see that number. Behind it is 14.7%. Do the math, and that's where it comes from. I don't know what happened to my graphics here, but it's somewhat hidden. Now, what I want to do now is let's take a look at some of these expenses. Let's look at mileage. The first thing I have listed is mileage. Chances are one of your largest expenditures will come from mileage. And I need you to think about that, because changing your mindset everywhere you go, everything you do is business related. You can accumulate a lot of miles on your vehicle, and you want to do that. In this particular scenario, I have 15,000 miles as an annual mileage, roughly $1,250 a month. Now, honestly, I've talked to many people, and they average anywhere from 20 to 30,000 miles on their vehicle a year, and that includes going to work, that includes vacationing, every mileage on your car in a year's time. So if you assume that you drive 20,000 miles per year, and 75% of that is business, that's where the 15,000 comes from. Now, let me say something else. If you own your vehicle or you're buying your vehicle, mileage is the way to go. If you're leasing your vehicle, I actually lease our truck, and there's a reason why I do it. And by leasing the truck, I pretty much don't have to pay for the truck. The truck pays for itself. I write 100%, almost 100% of the truck off. All the monthly note gets written off. That's because I'm leasing a vehicle. But if you're buying the vehicle or you own the vehicle, then the mileage is what counts, right? So either way, I went through and weighed the two in terms of mileage and what I pay for the truck, and it turns out that what I pay for the truck, I will benefit more than the mileage, and that's the reason I do it that way. You have an option of doing it. So that's just what we do. As far as the rent, I said that they rented a house, and in this particular scenario, I made the assumption the rent was $950 a month. Well, you remember when we just did that calculation based on the office space and the storage space, and come with the 14.7% allocation. This is the first application of it. If you look on the column, the fourth column here, utilization, that's where I applied 14.7% times the annual that you would have paid on that. You would have paid in rent anyway. You're going to pay rent, and before, without the business, you just paid rent. That's money going down the drain. But now you get to write off at least $1,675 of it. All right. Cell phone, I got $125. Now, if you have a landline, and some of the younger people, I hope you know what a landline is. But for the older generation, we grew up with landline phones. We didn't have cell phones. Every house had a phone in it. So if you got one of those, a landline phone, you could justifiably say to the IRS that, hey, my cell phone, $125 a month, I use strictly for business. And you write 100% of it off. But if you don't have a landline, it might be a little hard to justify to the IRS that your cell phone is 100% business use. So you have to be a little more realistic. And if that's the case, don't have a landline, then maybe you will only take 90% of this. You might can get away with that. Take 90% of the $1,500, and that would be your total for business. Okay. Supplies, of course, is 100%. Anything you buy for the business, displays, pegboards, anything that you buy for the business is a tax write-off. You keep your receipts and you add those up at the end of the year. I got in here business cards, flyers, etc. I got $40, but this is all about advertisement. Right? So anything you do to advertise your business, if it costs you, then you need to keep track of those expenses. Now, a lot of times what you do, people look for the cheap way out. You know, I don't want to spend money on this. I don't want to spend money on that. You got to spend money to make money. You got to understand this concept, right? If you're not spending money, you're not going to make any money. And if you start making the money and not spending the money, the government's going to take it from you, all right? So spend it, all right, within reason. Now, I got down here vending fees. I got $400 a month. I know some people might shrug and not really understand this, but I need you to understand something. Vending fees could be anytime you have an event, no matter where the event is. If it's not an office you're going into, if it's not a brick and mortar or store that you're going into, it's considered a vending event. All right. We set up in the mall. That's vending. Okay. Why that's vending? We don't have a store. We just have a kiosk. It's not even a kiosk. It's they call it what do you call it, man? It's a kiosk, but it's a kiosk. A cart, yeah, cart. It's on wheels. It's a cart. It moves. All right. So we treat that as a vending event because I have to pay to be there. Right? That's not rent. That's a vending event. Now, here's the thing. I made an assumption here: $400 a month. You might say that's a lot of money. No, we spend over $25,000 a year in vending fees. That's a lot. That's a lot. So when we try to share opportunities for you guys coming to the mall, and if you turn around and say, "Oh, that's too much money," that really hurts because you have no clue of what we're doing to try and help you come into this mall. We don't charge you nearly as much as what we pay. But it's not about that. What it is about us trying to help you get to that next level. So hopefully one day you'll be able to do it yourself, right? So this is all more of a promotional thing of us trying to help you build your team. You're meeting people. You're building your team that way. You're selling your merchandise. So it's a lot to this. And it's very valuable. The other thing I threw in there was lodging and meals, and I got $150. Now, if you go to Vegas or you go on a trip and you know you happen to go to Myrtle Beach and you want to take a little vacation, you take your jewelry and you write off your lodging and you do those kinds of things, it can add up to a lot of money. But if you're thinking business first, it's not a vacation. You're going on a business trip. And while you're there, just happen to take a couple of days and rest for yourself and rest, on vacation. But you get to include that. If you look at those expenditures that I have listed there, when you add all those numbers up in the right-hand column, it comes out to be $19,400.
Hey, Pop, can I ask a quick question about that?
Sure.
Whenever I'm trying to remember what you taught us back, way back in the beginning when you were saying using the vacation, you said that you call ahead and set up something so that you can write it off. So what are some examples of some things that we could do while we're on vacation to make it a business trip?
Well, I did that when I was talking about my econ, because with my econ, I didn't have a product. So if I didn't have G, I need you to, Miss Brown, I need you to stop. Okay, so okay, y'all don't hear in the background, but I do. It's distracting me right now. What I did was with my econ, because I didn't have a product, I would actually attempt to set up meeting locations to talk about the service that I was providing. Well, paparazzi is a little different because you don't have to talk about anything. You actually got a product, a physical product you can show people. So you don't have to call ahead and do anything. You can go. You can say, hey, I'm here out here in the parking lot. I'm pushing these products. I'm trying to sell these products. You could set up a party at someone's house in another state and go. and have a party and sell your product there, stay in the hotel, drive back the next day. Anything that you can think of that you could normally do at home, and you can do that away as well. And when you do it away, then those are certain expenditures that you have to incur in terms of your travels, in terms of your lodging, in terms of your meals. And those are the kinds of things that you get to claim at that point. That make sense, Shauna?
Yep, that was perfect. Thank you.
All right. So if you look over here in the right-hand column, you see where your total expenditures for this particular scenario came to $19,000. Now yours could be more, yours could be less. But let me drop this nugget onto you. The more money you make, the more you need to spend for your money. Okay. Now, I want to say this because there are a lot of paparazzi consultants that have been bombarded with this tremendous amount of income. It's new to them. They don't really know what's going on. I watch them. They're making thousands of dollars a month, but they are going to be in trouble when it comes to taxes. I'm going to take a lot of their money. They don't understand what they got to do. When you make money, you got to spend it. If you don't spend it, guess what? Uncle Sam's going to take it, right? You're going to lose it one way or another. So you really got to learn how to play this game. That's all it is. You just got to learn how to play the game. You got to learn what the rules are. And that's one of the things I'm trying to teach you is paparazzi is more than just selling jewelry. This is a business. So you got to understand the business aspect of it. So that's what we're trying to share with you. Now,
can I say something?
Yes.
I can bust that? No, listen, when you're saying spend money, it's not go out and buy some shoes. That's not what we're talking about. We're talking about expanding your business. So once again, if you want to expand your business in Puerto Rico, then go to Puerto Rico and expand your business. But it has to be tied into the business when you're spending the money. So when he say you got to spend it, we're not talking about shoes and all this other stuff, unless you are buying Coach bags for prizes for the team.
Okay.
You follow what I'm saying?
Good point. Yeah. What I was saying, good elaboration on what I was saying. Yeah. Spending money is strictly about the business. So the things that she just alluded to towards the end would be promotional items, because that's another category I didn't have up there. But that's an expense also. And if you hear about these people in paparazzi that have these extravagant gifts that they're giving or incentives for people, which I hope we're going to be able to hear about this. That's because those are promotional items, and they have to spend that money if they don't want Uncle Sam.
Rosie, mute yourself, please.
Can I mute her? I don't see her. Yeah, I got her. Okay. All right. So let's look at this chart here that I put together. This is no home-based business on the center column versus a home-based business. So let's go through this. It's a tax scenario, all right? So it's very basic schedule, a 1040 schedule, basic, all right? Now, again, in this scenario, we said that the couple made $60,000 a year. Now, this is with no home-based business. This is their tax situation. They made $60,000 a year gross income, okay? They have no business, no expenses. So their adjusted gross income is $60,000, right? In 2018, they changed the tax laws, and your standard deduction for a couple married, a couple filing jointly, is now $24,000. It was much less than that last year. But this year, 2018, the standard deduction is $24,000. So when you subtract that $24,000 from your adjusted gross income, 60, you have a taxable income of $36,000. That's what that is. Now, because I didn't have access to the 2018 tax table, What I did have access to was the 2016 tax table. So for illustrative purposes, that's what I use. So I went to the 2016 federal income tax table and I looked up the tax for $36,000. And the tax on that $36,000 in 2016 was $4,476. Now, in this particular scenario, I said in the beginning that federal government withheld $4,000. So when you take the difference between the two, subtract them, you see that they withheld less than what you owe. When they withhold less than what you owe, guess what? You got to pay the balance. So in that scenario, that couple got to pay $476 federal taxes. It has nothing to do with state, it has nothing to do with anything else, it has nothing to do with kids and other deductions that you may be able to get. I'm trying to keep this as simple as possible to show you a comparison between having a business and not. So let's go over to the home-based business. Same scenario, $60,000 combined income. Now, I arbitrarily chose $8,000 as a business income. I could have chose any number. It doesn't matter. But I want to keep this thing realistic, right? I need you to see that you're still adding to your income. So now, let me pause for a second. This $8,000, what I'm showing you now is based on sole proprietorship. And I think most of us are sole proprietors in Paparazzi. Now, if you are an LLC, limited liability company, or if you are an if you're incorporated, this doesn't apply to you because you got to file a separate tax for the business. But I think for the most part, everybody on our team is filing sole proprietorship. And if you do sole proprietorship, that means any money you make in the business gets added to your personal income. Okay, so that's why we're showing this here. So this arbitrary $8,000 that I assume that we made this first year in the business gets added to your wages from your regular job. So now your gross income is $68,000. But look at this. Now you get to deduct your business expense. Your business expense of $19,000 that we just walked through a few minutes ago. Now, when you do that, when you take the difference between the two, now your adjusted gross income is reduced by $19,000. It's $48,594. Then you get to deduct your standard deduction. So you see this, you got to deduct that 19 plus this 24. You really got a $43,000 deduction instead of a $24,000 deduction when you add this in. That's power. So now your taxable income becomes $24,594. When you look in the tax table for the tax liability for this amount of money, it's $2,759. Since they withheld more than what you owe, guess what? You get a refund, $1,241. Now I need you to let this marinate for a second, because I really said a lot, and I didn't go into a lot of detail about some of the other things that you can do and what some of the spin-offs of this can be. And if I'm not mistaken, I think a lot of you have jobs as well. Now, when I was doing my econ, one of the things they talked about in my econ that they shared and tried to teach people, they talked about income shifting. Now, let me tell you what they're talking about. Notice how you have a refund here. Now, I wouldn't get excited about this refund. You know why? That refund is for the money you already gave them. It came out at $4,000. That was your money anyway, right? So why you jump up and down about getting some of your money back? Think about that, right? So what would be ideal? You remember back in 2016, Donald Trump and Hillary Clinton in the debate, and Hillary said Donald didn't pay any taxes, and Donald said, because I'm smart. What he's talking about is he used the tax laws. He may have done some other stuff too, but pretty much used the tax laws to pay as little taxes as possible. Now, that's not cheating the federal government. If you play by the rules are there. You just got to know what the rules are. And if you play by the rules, you're playing fair. That's not cheating. That's not stealing. That's understanding the system. That's called capitalism. That's what this country is based on, right? You got to understand the money. You got to understand how to work the money, what to do with the money. If you don't, they take it, right? This is serious, people. So paparazzi is a great avenue for generating the money, but we also got to learn how to take care of the money. That's very important. So basically, now, again, you can hug your fear, see how simple paparazzi is, make your dreams come true, and claim your tax benefits. Do I have any questions?
Okay, I'm chiming in real quick. The one thing that I'm getting out of all of this, because we can pull our records in our back office of how much jewelry that we purchase. But I know that you guys are buying things to carry your stuff around in besides a bling bag. Some of you have gotten really elaborate with it. Some of us, between the pegboards, the miles that you drove there to get the pegboards and get them cut, the racks, the miles that you did going to Walmart to get the racks, the spray paint, the tape around, all of these things are adding up into that $19,000. And I'm just using 19 because that's the number and stuff that he utilized. So how do you get to that? It is keeping those receipts and logging them immediately. So in our back office, they're under files inside of Team No Limit. If you go in there, you will see, I'm going to read, there's an income expense tracking sheet. And there, I even put there's another Mary Kay one that's in there that someone had gave to me. But I have one back there that's quarterly that you can do where you're logging this stuff down. For us, the, what is it called? Cash flow manager. That's the one that works the best because I can do this stuff on the go. Like for instance, today, I just bought a ring case. Of course, I got it through Amazon, so it chimed on his phone. And then he turned, did you log that in? Because it's all of that stuff that you got on Amazon, like you said, displays, ring case, display boards. I've seen some of you guys set up. It's a lot of stuff. The paper that you use to print on, the ink, it goes on and on and on. All of that is adding up to that $19,000. And for some of you, it's even more than that. But look what it does to your income. When you're doing cash prizes, back office credits, all of those things come into play to reduce. Well, look at the benefit of it. So that's what I wanted to share. It's like, listen, guys, you better go find all them receipts. We're doing this hopefully early enough in the year to where even if you had to start from now to the end, you can utilize quite a bit of this on your mileage and everything. If you're going up to a vending event, you're coming up to the mall, those that are coming up to see me to pick up their prizes, that's still paparazzi related. If I have a team meeting at the mall, that's still paparazzi related. Everything is connected to paparazzi. I'm going to leave the house and I am going to share my business with 6 people tomorrow. Well, wherever it is that I stop, if I decide to stop inside of the Dollar Tree, I'm looking for people to talk to. All of these are miles. All of these are miles that I'm utilizing. Got to change your mindset. Anybody else has a question? Unmute yourself and ask.
No questions? I guess they got it there.
Yes, I have a question.
Sure.
Can you hear me?
Yes, Charmaine.
Yes. So what do you do if you're in with not having a receipt? Do you scratch that and you can't claim it?
No.
Can you go to your bank records and use those transactions if you don't have the physical receipt?
Wait a minute, wait a minute. Give me an example. What kind of receipts are we talking about? How can you pay?
All right. So receipts from purchasing Amazon display boards. Can I use my bank transaction for that?
Yeah,
Or my Amazon ordering history? Or
yes.
do I need a physical receipt?
No. Sometimes what I do is, if I'm ordering on Amazon, say paid or whatever, I can do a screenshot. I'm using my phone because I use the Cash App, and then I'll just put that um, into the program. It comes down to it. Your bank statement, yes, but that can be a little tough. It can be a little tricky because I don't know how long your banks hold on to it. So if you like print your monthly statements and then you go through and maybe highlight what they were, a note here or there. Again, it's being able to answer the essential questions. If the IRS asks you, you can say, well, this was Amazon, this was such and such. And I think, if I'm not mistaken, I think Amazon has, you can pull up your history of what you've ordered as well. And if you can do that, then you can print that off and keep that as well. So anything that you can show and prove that, that's the product that you bought. Because you got to be careful. Well, when I say you got to be careful, what they're looking for is, you lumping that into some other big purchase. So let's just say you got $100 purchase, and in that $100 purchase, you may have bought some paparazzi bags that cost $5. Then you're trying to claim the whole $100. But pull out that $5 if it's paparazzi related. You know what I'm saying? So just make sure that whatever it is, you're going to identify whatever it is, how it relates to the business.
And so you're saying when you say pull out that $5, pull it out and claim it, but I can't prove it, right? Because I don't have itemized physical receipt.
No, you can't. If you're using your bank statement, and that's why. Well, let me put a disclaimer here. Normally, what I try and do is, if I'm going to pay for something, I try not to add anything personal to what I'm paying for. That way, I know that when I look at that number, that's all business. If it's personal, I'll make them ring it up twice. Right. So if you do that, and then if you're looking at your statement, you know that that $100 or that $5, whatever it is, at Amazon is all business. You then use that number, and then you can make a note and say what it was that you purchased. Now they're not going to get nitty gritty over $5 items, but they're going to track and see how you're keeping and maintaining your records. And then once you prove that you are adequately documenting your transactions, and you're adamant about keeping your business and your personal separate, you shouldn't have a problem. So if you don't have a receipt and you got a bank statement, highlight it and record it anyway. Worst thing, they come back and say, no, you can't. It's not enough to prove that you did it, and they take it off. But for the most part, no, do it. Can that make sense?
Can I chime in real quick, Pop?
Sure.
A lot of us do a lot of our shopping on the internet, including Amazon and anything else. So anything that you do on the internet, they send you an email receipt. And I never delete any of my emails. That's why you see I got like 43,000 the other day. I screenshotted it. But I can easily search Amazon or search New York Company or wherever in my email, and in everything that I've ever purchased from Amazon or whoever, it pops up, and then I can just go through and print all of those out and, like he said, highlight. So that's another thing. If you can't go back in your Amazon account to look, but you should be able to. I don't know if you were thinking about, that was just an example that you gave, and you were thinking about other things, but like stuff like Amazon, you can go back in your history. You'll have a receipt.
Yeah, right. I mean, with Amazon, it's easy because they give you the picture, the name, and everything from years that you purchased. So that was an example. But even with gas, the gas that I have used in the past, going on a year and a half, of carrying the jewelry to the school every day back and forth, and now carrying it to the mall That's a lot of mileage and a lot of gas.
Well,
So I'm saying if I didn't get a physical receipt,
let me clarify that for
am
you.
I able to go ahead?
Let me clarify that for you. First of all, you can forget the gas unless you lease the vehicle. Since we lease the vehicle, I can write off the gas. I can write off the maintenance. I can write off anything associated with the vehicle because I'm leasing it. When you own the vehicle or you're buying the vehicle, you can't write off the gas. You can't write off well, you probably could the maintenance, but you can't write off the gas because that's all factored into your mileage rate at the end when you do the 55 cent, whatever it is. That's already factored in. So all you got to do is keep track of how far you go. Okay, that makes sense.
That makes tons of sense and it helps.
Okay.
So, well, I'll ask that question outside of the main meeting. But it sounds like to lease is more beneficial if you want to also get the gas. If you're doing the type of mileage that I'm actually accumulating. I mean, if you're doing the type of gas expenditures that I'm actually doing.
No.
But
No, that's not necessarily true. Okay, here's the deal. There's a cutoff to where it's advantageous to lease and it's disadvantageous to lease. And you're putting a lot of miles on your car. It's not advantageous to lease because you'll get to a certain point where the mileage will begin to hinder you and it's going to be expensive when you have to turn the vehicle in. So you got to find that fine balance. If you got more than one vehicle, then yeah, you might can get away with it because you don't have to put those miles on it. Because I got a leased vehicle, I still got to track the mileage because I have to be able to calculate the percentage of business versus personal, right? But I try to make sure that everything we do in the truck is business. So I'm anywhere between 95 to 100% business, right? Every once in a while, I might get a little something here that's not business, but for the most part, it's business. But when you're putting as many miles as you are going from where you live to the mall, you got to get that mileage. You will get burned behind leasing. I can tell you that now. You get burned because once you start it, you got to stick with it. Right, and unless you write to the IRS and say, okay, I want to change this. So, I can almost assure you that what you're doing is the only and best way to do it. So, hope that helped.
Yes, it did. Thank you.
Mm-hmm. Anybody else?
Yes.
Okay.
So, okay, let me phrase it. I do not feel as educated in taxes as you are, right? And as somebody who professionally does them. Would you advise the larger our business gets to have someone do it that is well versed in the changing laws, or just start studying it now so we can handle it on our own, no matter what size our business gets? Or is that something you say would be a personal choice?
Well, it would be a personal choice. I mean, it gotta be something you feel comfortable with. You when you are looking at someone doing your taxes, you also want to be careful. You need to interview them as well because because they say they are a tax accountant or a tax lawyer, that doesn't necessarily mean that they know and fully understand the home-based business aspect of it. You got different types of accountants and attorneys, and some of them kind of stay clear of that stuff and will advise you against it. But you can do your own research. All of this stuff is online and it's free. And then if you don't even understand something you read, you can even search that as well. I'm not a tax lawyer, I'm not a tax accountant, but I have spent countless hours trying to understand what is it that the IRS is looking for? What is it that I'm supposed to do? Do I understand it all? Nope. I don't. But I try to understand enough of it that applies to what I'm doing. And I think that would be the key is to try and understand the small business aspect of it. When you understand the small business aspect of it, then you can try to apply that to your personal situation. Because it gives you all the do's and the don'ts and what you can and can't do. And as long as you're answering the essential questions that I said, who, what, when, where, and why, that's all that matters. Because it's not about whether your business made a ton of money, but it's about whether you operated your business as a business. That's what the IRS is looking for. Are you operating it as a business?
Thank you, sir.
Okay, somebody has a hand up. Okay, I don't know. I can't see. Go ahead. I don't know why I can't see it.
Go ahead, Tandy, with your question.
Tandy. Okay, I do see her hand. Tandy. If you're talking, we can't hear you. You're unmuted on my end. All right. So there are no more questions. We're gonna go ahead and close out. Tandy, I can't hear you. You can send a note or call, and we can try and get your question answered. But thank you for joining part 3 of Start Your Empire. And I hope this was beneficial to you. Let some of that stuff marinate. I said a lot, and there's a lot I didn't say, but it's in there. And hopefully it can generate questions, and you can start inquiring about it and see just how involved it is to having a home-based business. Paparazzi is more than $5 jewelry. Okay, it's much bigger than that. This whole thing that we're involved in is much bigger than that. And I'm trying to help you see the bigger picture and see that there's no limit to this thing. But you gotta learn. You need to or should learn what you can and can't do and what's all involved, so that you can take full advantage of it. All right. So again, this is the end, and I thank you for joining us. And if you're in the replay, thank you. If you have any questions, ask questions in the replay, and we'll try and get answers to you. Have a good night. How do I